Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello, my name is Vinay Joseph and I'm the Chief Investment Strategist at Standard Chartered Bank India. In our final series of podcasts outlining our asset class view for 2022, today we discuss the outlook for FX and commodities for the coming year. We expect the INR to be range-bound over a 12-month time horizon. A growth recovery amid a pro-risk sentiment, strong FX reserve, increasing FDI inflows, and possible inclusion in bond indices are key factors supportive of the INR. However, higher oil prices, current account deficit risk, fall in the INR carry spread, and expensive valuations relative to other peers may prevent the INR from strengthening. The key near-term drivers for the INR would be outlook on USD and how do oil prices evolve over the year. Our 6 to 12-month USD view is range-bound with a bearish bias. We do expect the USD to peak in the first half of this year. As first, the USD reconverges down with real yield differentials that are likely to remain negative for the USD. Second, relative growth expectations begin to favor non-US markets and capital flows start to rotate away from the US. Third, the large twin US deficits become a negative factor for foreign investors. And finally, commodity currencies strengthen in line with their improved terms of trade. The speed and timing of the USD reversal will depend on the evolution of Fed's policy and the commitment of Europe and China to deploy fiscal stimulus. For oil prices, we think 2022 would be a volatile period. We remain constructive modestly on oil prices, as market balances will likely remain tight for the foreseeable future as supply catches up with demand. While downside risks to oil demand have risen given the Omicron variant, we believe excessive pessimism is already in the price. Long-dated oil prices have held up so far, still despite low inventory cover. Although OPEC Plus is continuing to raise production, the cartel will monitor closely market condition and has left the door open for any swift action. Further, the response from US shale producers has been tepid, highlighting the emphasis on capital discipline. Overall, unless demand weakens more, we believe current low inventory levels will limit further downside from here. Finally, on gold, we continue to believe that gold plays an important role in diversified investment allocations, driven by a variety of factors. First, history suggests gold does well in periods of high inflation. If inflation proves to be higher or longer lasting than our expectations, gold can act as a portfolio hedge. Second, we do expect higher bouts of equity volatility in 2022, given the transition to mid-cycle. This can be partially mitigated by gold. Lastly, our view of modest USD weakness should eventually offer a pillar of long-term support for gold. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.